This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. A cautious open ahead as traders count down to the Trump tariff deadline. Central banks in focus too, with decisions this week in several major economies. Senior Trump officials signalling some breathing room on tariffs, saying higher rates won't kick in until August, with extensions or negotiations still possible. Plus, oil falls as OPEC Plus agrees to a bigger than expected production increase next month, raising oversupply concerns.
It could be a cautious start to the Asian trading session, of course, despite the fact that U.S. Trump officials have talked about potential extension to that blanket tariff. So the deadline is still on Wednesday. The trade negotiations with Japan looking pretty stalled at the moment. The Nikkei futures now down 0.6%. They barely moved in the last two sessions. And of course, here in Japan, we're also watching for wage data to come at the bottom of the hour. So do watch out for that. Very important when it comes to the Bank of Japan decision. We do have central bank decisions across Asia today, including from South Korea, Australia, New Zealand, and Malaysia as well. We have the Japanese yen leading those gains in the G10 peers. Right now at 144, 145 is the level. But of course, it's also the Treasury space that we'll be watching, the JGB space. We saw futures rising on the other side. We're watching Treasuries as well. Take a look at how the U.S. setup is looking right now, because we had continued pressure on UK gilt markets. And that, of course, has led to more pressure last week when it came to the Treasury space. So we'll be watching that as well as fiscal concerns grow just globally overall. U.S. futures at the moment under a little bit of pressure. Remember, we're coming off a long holiday weekend. We had already seen futures pressure on the Friday session, and Brent at the moment falling for a second session, Haidi, at that $68 a barrel level.
It is all focused back on trade, isn't it, Shery, with nations scrambling to secure these agreements with Washington or to lobby for extra time ahead of Wednesday's deadline. President Trump says tariff letters to trading partners will start going out on Monday.
We're going to be sending letters out on Monday having to do with the trade deals. It could be 12, maybe 15. You know, Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
Our Chief North Asia correspondent Stephen Engle joins us now for more. You know, last week President Trump said that he didn't think there'd be need or space for extensions. We're hearing a bit of a different tune from the Treasury Secretary.
Yeah, those letters that are going to be sent out, if they are indeed sent out, might have a little bit of an olive branch stuck in the envelope as well, because Scott Bessent says, of course, their officials, the Treasury as well as the Commerce Department of Howard Lutnick, worked through the weekend, still negotiating. It was the 4th of July weekend, holiday weekend, so they were working and burning the midnight oil to try and get some deals done, or at least framework agreements with a number of trading partners. You heard from the president there saying possibly 12 to 15 letters were in the works to possibly go out. Scott Bessent was referring to about 18 major trading partners that they're working on some sort of negotiation. So the next 3 days, so it's Sunday night in the U.S. right now, so you have 3 days until that deadline on Wednesday, July 4th, to return those April 2nd reciprocal tariffs back to those high levels, potentially. But again, you can kind of tell there's a little bit of wiggle room because of the sheer size of negotiations and number of different trading partners you have to do deals with, and the clock is running out really fast. In fact, Scott Bessent said a lot of congestion right now going into the home stretch. And Scott Bessent says the focus is on 18 major trading partners, with several big agreements are close, while saying, quote, there's a lot of foot dragging on the other side. So, again, kind of putting the onus on the other side, and there's many other sides, to pick up their feet and get these across the line, essentially. So we're talking about now a possible, as well, 3-week extension for those countries that are working towards the July 9th deadline on Wednesday. But possibly there's that olive branch, as I mentioned at the top, a 3-week extension. So that would essentially put the new deadline for the implementation implementation of these tariffs of August 1st. So, yes, to answer your question, it seems like there is a little bit of time built into this. But, again, they're going to use that Wednesday, July 9th deadline as a bit of a fire under the feet to get the deals done.
When it comes to Japan, negotiations so far seemed a little bit stalled. Do we have any more updates on that, and any other Asian nation that might be more advanced when it comes to getting to that deal?
Well, a lot of Asian nations, as you know, have a lot at stake because they were hit with some of the more punitive tariff levels, like Cambodia, like Thailand. Cambodia was 49%. Thailand was 36%. Japan was, 24? South Korea, 25. So they have a lot at stake, and they have a lot of the export products that are at the heart of whether reciprocal tariffs or sectoral tariffs, like automobiles. India was 26%. There's still many stumbling blocks. Indian officials have signaled a tougher stance in recent days, threatening levies on some U.S. goods in retaliation to Washington's higher tariffs on automobiles and automobile parts. Obviously, automobiles are central to South Korea's and Japan's negotiations. You mentioned Japan, Shery. Ishiba, Prime Minister, saying that Japan is prepared for all possible tariff scenarios and is ready to stand firm and defend its interests. Some of the other progress that we have seen, Cambodia, which I said has a 49% initial reciprocal tariff. The government on Friday said it had agreed to a framework agreement with the United States. So that is progress for Cambodia. They're a big textile and footwear exporter to the United States. I'm looking at Indonesia right now. They got that 32% tariff. It signals confidence. It is close to securing a bold trade deal with the United States, spanning critical minerals, energy, defense cooperation, and market access. And then Thailand also, despite its government chaos right now, it seems like they are making a last-ditch effort to avoid that 36% tariff with offers of greater market access for U.S. farm and industrial goods and more purchases of U.S. energy, as well as possibly Boeing jets. So there are a lot of moving parts here. My little brain's going to be working massively over the next 3 days to, get my head around all of these and get them out to you.
I'm just surprised how you remember all of the tariff levels for different countries at this point.
Notes help, very cerebral, Stephen Angle. Yeah. Chief North Asia correspondent there, keeping track of all of these fast-changing developments, right? And trade tensions between the EU and China are also growing. French Finance Minister Eric Lombard is calling for stronger tariff barriers as Beijing announces reciprocal curbs on EU medical devices. China is also imposing anti-dumping duties on European brandy for 5 years, while exempting major producers that commit to keeping their prices above minimum levels. But the French industry minister told us exclusively that this should not be seen as a victory.
It is too early to talk about the impact, because we need to assess the overall impact for the cognac industry. Trade wars only make losers. So we shouldn't be happy with what was announced today by China, even if some agreements can be found. But I think that there are a lot of jobs, thousands of jobs, that are at stake with the cognac industry. Many parliamentaries, many MPs talk to me about what happens in their constituency with cognac. And I think that we all must find a way to de-escalate this trade war with regards to cognac, but also with regards to all the tariff issues.
Another, obviously, big deadline is July 9 for the US tariffs. We may have some letters from President Donald Trump today sent about these US tariffs. Do you think that if the EU settles with 10%, is that a good deal for Europe? Should we just settle at 10% and be done with it?
No, I don't think that's a good deal. I don't think that's a good deal because previously we were at 2, 3, 4% of tariffs in many industries, and all the value chains were organized by taking into account this level of tariffs. So I think that 10% is not a good deal, And I think that we all should find a way to get back to the former situation.
French Industry Minister Marc Ferracci speaking exclusively with Bloomberg's Caroline Conan. Leaders of the BRICS nations have begun their summit in Brazil by condemning U.S. and Israeli attacks on Iran and calling on Israel to withdraw troops from the Gaza Strip. Executive Editor for Economics and Government in EMEA and LATAM, Flavia Kraus-Jackson, joins us now from Rio de Janeiro. It's good to have you with us. So this all coming at a time when President Trump is expected to have Benjamin Netanyahu at the White House on Monday, right? What exactly were BRICS nations saying about the conflict with Iran?
Yeah, I mean, the BRICS is a slightly idiosyncratic and schizophrenic grouping right now, right? Because they want to sort of join together and show a force and alternative to Donald Trump. But if you even look at their statement, they are sort of poking the bear to a certain extent, but also do not want to invite a direct confrontation with Trump. So you see this in the tariff language where they call out the tariffs, but they don't actually name Trump or the U.S. by name or country. And you also see it in the geopolitics. So the kind of language that they're using, obviously, is the kind of language that would incense Trump and Netanyahu. So it'll be very interesting to see tomorrow when Netanyahu shows up at the White House, whether in fact they will comment on this gathering here and the kind of language that they've used. But it's notable that it's known that the host, Lula, has been very frank. He's also in the past used some of the language describing actions of Israel on Gaza as genocide, and it's never gone further. To a certain degree, Trump seems to just fob off Lula and ignore what he says, both at the G20, at BRICS, and of course it'll be very interesting to see when he's hosting COP, which we don't expect Trump to show up at, whether Lula, even though he's very vocal and aggressive in his rhetoric against Trump and the policies enacted, whether in fact it will invite a reaction by the White House.
Speaking of no-shows, there's some pretty distinct absences from this gathering.
Yeah, absolutely. And I think we're all sort of trying to see how Lula handles it. I mean, back in November, he's sort of in a weird position of hosting all these big events. You'll remember at the G20 last year, he just simply forgot to have Biden in the frame, which was made it quite awkward. And this time, he's trying to sort of cover up the fact that there's some pretty notable absences, the primary one, of course, being Xi. And so he's making a massive deal about Modi being here. You can see about how much he's hugging him. He's giving him a state visit. And he's almost trying to overcompensate for some of these big absences by inviting all and sundry. But there are a couple of things that I think are really important. Back in 2023, the BRICS essentially doubled their size. And right now we have Saudi Arabia, who really is undecided about whether to join or not join. And you see this very much in the optics of the photo and the fact that MBS has not shown up here. He doesn't travel much, that is true, but essentially the Saudi Arabian vote, which is so important to BRICS, they're here in a kind of very quiet capacity, but they haven't actually joined. And this is a real turning point for BRICS, because if you can't have the biggest country show up and your expansion isn't all it's meant to be, what does it say about how much this group really matters?
Premier Li Qiang now saying the BRICS countries should take the lead in advancing reforms in global governance and championing the peaceful resolution of international disputes. When you talk about the fracture among BRICS nations, how much can China be a leader here?
I mean, anything that China says, of course, matters. But China's in a tricky position in how it's viewed by other G20 countries and how it's viewed by the BRICS nation itself. Its role in Ukraine is fairly controversial. To what extent is it backing and supporting Putin? And I think even when it comes to the fact of Iran, countries like Russia and China have essentially been allies to Iran but have not come to its defense. So I think everyone is sort of taking stock of the fact of how much does China say and how much does it do, and there's a sea of difference there.
Bloomberg Executive Editor Flavia Kraus-Jackson there from Rio de Janeiro. Some of the stories that we're following this hour, and Israel is sending mediators to restart talks with Hamas in Qatar after the militant group said it was ready to negotiate on President Trump's proposed 60-day ceasefire in Gaza. The proposal includes the return of 10 living and 18 deceased hostages. It has been accepted by Israeli Prime Minister Benjamin Netanyahu, who is set to meet the US president in Washington today. Trump says he's optimistic that the sides are close to an agreement.
I think we're close to a deal on Gaza. We could have it this week.
Iran's Supreme Leader Ayatollah Ali Khamenei has appeared publicly for the first time since the 12-day war with Israel began last month, according to Iran's state media and his official website. After weeks sheltering in a bunker, Khamenei attended an annual Shiite religious ceremony held at his compound, the New York Times reported. Khamenei didn't address the crowd, which appeared surprised by his appearance. More ahead on the Asia trade, this is Bloomberg. Take a look at the week ahead, and the world may be about to get more clarity on trade deals as the 90-day reprieve from President Trump's so-called reciprocal tariffs ends on Wednesday. Treasury Secretary Scott Bessent says several big packs are close, while some countries could get a 3-week extension. Here in Asia, rate decisions are the key focus. Economists seeing Australia's RBA delivering its first back-to-back rate cut in 6 years. Central banks in Korea and New Zealand are expected to hold. China also releasing its latest inflation report, which could show consumer prices falling for a 5th month and factory gate prices continuing to slide. Let's bring in Trinh Nguyen, who's the Emerging Markets Asia Economist at Natixis. Trinh, really great to have you with us. So we're getting sort of a conflicting picture when it comes to what happens with these trade deals. We know that the president isn't perhaps so keen to give an extension. We're hearing perhaps more willingness to negotiate from the Treasury Secretary. How do you see the trade picture at the moment? Has it sort of taken a back seat because clearly markets are feeling a little bit more complacent about it?
Well, one thing is very clear is that tariffs are up under the Trump administration 2.0, but the U.S. also needs trade partners. And so the maximalist position we saw on reciprocal trade day is likely maximalist, and we're probably going to settle much lower. And that's why markets are comfortable in that the U.S. needs trade partners. And there's room for Asian policymakers to strike a deal, meaning extensions are likely. Secondly, there's room for India, there's room for Japan, there's room for South Korea, and across the spectrum in Asia to have trade relationship with the U.S. But there's still certainly a lot more friction to trade, and we have to accept that certainty.
We've seen some good news when it comes to sort of frameworks with Vietnam, for example. Does that matter as much when there's not as much certainty when it comes to China, because it is still sort of the anchor economy across emerging Asia?
Absolutely. What the Vietnam deal shows is that the U.S. needs Vietnam. Obviously, Vietnam needs the U.S. more proportionally than any country in Asia, given the huge exposure to the U.S. and trade in general. That being said, the fact that it climbed down from 46 to 20% with a caveat of 40% on transshipment means that it does need Vietnam to do labor-intensive manufacturing in particular. And the China plus one, if it's going to go hawkish on China, it does need other trade partners within the region. So the Vietnam deal shows that the U.S. will also need countries like India, also Japan and South Korea to do trade for supply chains to reshuffle away from, given the fact the labor market in the U.S. is very, very tight at the moment and is not competitive in manufacturing. And U.S. firms need Vietnam as much as the U.S. as well.
But will other countries not need Vietnam as much if we're talking about that 40% levy when it comes to transshipped goods? I mean, there was a lot of investment going into these economies because other countries wanted to manufacture there, but will that become an issue long term?
The estimate shows that it's roughly around at a maximum 16% if you look at the Harvard study. The second thing is that the 40% actually will encourage more localization in Vietnam. That's a key issue, is that when you attract FDI into a country, you don't just want to add the final packaging, the final assembling. You do want your inputs to rise over time, and this puts the onus on Vietnam and countries like it over time to move up the value chain, just like China. So I do think that this is a positive. The second one is the fact that China was able to reshuffle its supply chains via these countries means that the U.S. will try to block this around. And an example for Vietnam, the cost for it is the solar sector. The U.S. slapped 400% tariffs on Vietnam solar. And that means that if a Vietnamese company's firms want to export to the U.S., that market is now shut. And the reason why it did that is due to the rerouting of Chinese solar via Vietnam. So Vietnam is a country that has a lot to lose, and it also has a lot to gain to protect its #1 markets. The China PPI today shows that the U.S. remains a market with the highest profit margins for U.S. traders. Because onshore in China, we have a situation where demand remains very weak and producers' prices are very, very low, which means the competition for China is very fierce, not just within China, but when it exports to the rest of the region. For the Vietnamese and for the rest of the Asian, the U.S. market therefore remains the most competitive, particularly if tariffs on China remains relatively high and higher than the rest of the Asian countries.
How is the two-track economy in China evolving right now when it comes especially to that slump that we continue to see in the property space?
Well, I think it's one of the situations where it's slowing down, but it's still, I think it's a problem that's going to amortize over years versus the U.S. where you have a massive crash and recovery. For China, it will need the government help versus just such as cutting interest rates. At the moment, given the fact that the dollar is very weak, it gives it more space to do so. But it's also very vigilant, right, in helping a lot of these deflated sectors. In that, it also looks with a keen eye on what's happening with trade. Export to the U.S. has slowed down materially because of higher tariffs and higher friction. And that's a key driver to growth historically for China in recent decades. So for it, the yuan is an important one. It has appreciated against the dollar, but that appreciation is very weak vis-a-vis countries like the European Union, for example, where it's shot up 14%, but the yuan is only roughly $2 higher versus 2% versus the dollar. So for China, I think it wants to balance the both, being able to help the domestic economy, but at the same time making sure the external sectors are still competitive. Right. So it needs to export the deflation abroad, at the same time shore up domestic demand.
Trinh, super quickly, because we're out of time, central bank decisions, we have them from Malaysia and South Korea. Anything you're watching?
Rate cuts have been front-loading. Obviously, the RBA will cut, but for countries like South Korea, we now have stable government, which means fiscal policy is at the forefront. So at the moment, Korea is actually sitting pretty comfortable in that the central bank does not have to pull the trigger as aggressively as it did, because we have stable politics to negotiate trade and to front-load fiscal spending.
Trinh, Nguyen, great to have you back, Emerging Markets Asia Economist at Natixis. We have more ahead. This is Bloomberg.
Take a look at some of the stories we're following this hour, and the Associated Press reporting that at least 78 people have been killed after catastrophic flooding hit Texas. Search efforts are underway for scores of missing people, including children from an all-girls summer camp. The flooding coincided with the 4th of July holiday weekend and took officials by surprise. Thunderstorms and remnants of a short-lived tropical storm produced much more rain than forecast. Elon Musk says he's formed a new America Party after President Trump signed a tax cut and a spending bill that is repeatedly denounced. Musk made the announcement in a post on X after 65% of respondents to a poll on the platform backed the idea. Musk has ramped up criticism of the bill, which will end a popular EV tax credit this year. More ahead on the Asia trade. This is Bloomberg.
Right, we have breaking news out of Japan. We are getting the labor cash earnings coming in at a rise of 1%, which is actually below economists' expectations of growth of more than 2.4%. It's been actually decelerating for the last 3 months, still above that 2% level, but it's surprisingly a deceleration of gains of 1%. Real cash earnings, considering inflation, and you get 2.9% year-on-year growth. That's above economists' estimates. We had, of course, seen Japan's annual wage growth continuing to rise. The latest Shunto negotiations leading to the largest pay hike in 34 years. Very consequential when it comes to the Bank of Japan, of course. And right now we're getting the latest labor cash earnings rising 1% below economists' expectations. Of course, we'll be considering everything from part-time pay to full-time pay as well. Markets closely watching also U.S. trade negotiations with other countries while awaiting the Fed's June meeting minutes for clues about the future path of interest rates. Our equities reporter Bailey Lipschutz joining us now with more on this. Of course, plenty for investors to digest, especially given the uncertainty over the blanket tariff pause that's expected to run out supposedly on Wednesday, but may not and go until August.
Yeah, we have Letnick saying that those actual decisions will be made in the coming days, but will go into effect August 1st. But as we know, Shery, things have changed by the minute with this administration, so that's obviously top of mind for investors trying to kind of suss out what the actual path forward will be. I did actually catch up with a few U.S. investors over the weekend, and they did say one of their big concerns right now is how this Trump's big, beautiful bill kind of could vindicate his expectations going forward, and maybe that drives a bit more of a harsh talk or harsh stance as it relates to tariffs.
Is that the most concerning issue for investors, and how are they positioning now then?
It's very concerning just because there's so much unknown. We are still seeing in the U.S. markets at all-time highs. We did see a sell-off in treasuries, but when you look at the positioning, pretty quiet, all things considered, just given there were so much of an expectation that this would be a critical week. But as you mentioned, if the administration is going to kick the can down the road another few weeks, we do have investors really embracing that taco trade, so kind of betting that maybe Trump's talk will be worse than the actual kind of things that play out, if you will.
There's still a lot of consternation when it comes to the bond market, particularly at the long end, right?
Yeah, we're seeing that play out, and that's something that was top of mind, obviously, when you look at the jobs report that we saw, whether you want to take the bullish view, and that's why we saw treasuries sell off at the end of last week, and we saw such a sharp rally in stocks. But when you look at the fact that the administration in the U.S. is really kind of pushing something that's going to be costing the government a lot of money in terms of expenditures, there's going to be a lot of treasury sales in the coming days and weeks, and kind of what that looks like for a country that is hoping to kind of balance its expenditures between some of these kind of debt sales as well as potential income from things like tariffs. So when you look at the bond market, there is quite a bit of unease, but I did, again, catch up with a few investors over the weekend, and they kind of said, you know, maybe that was more of a knee-jerk reaction that we saw late at the end of last week. You do have kind of investors and bankers kind of moving on to the beach to celebrate the 4th of July in the U.S., so more to be seen. The big question is what happens with the Fed? Do we see those two rate cuts, and when do those actually play out? Again, it's hard to argue that the economy is in a tough spot when you have a jobs report, at least from a headline perspective, that we saw from the U.S. at the end of last week.
That's why it seems when it comes to stock investors, they're using just any excuse to keep pushing higher.
Well, I haven't had a conversation with someone who's not skeptical of this rally, but you don't get paid to sit out rallies, and that's really been one of the things. It does seem like when you look at the data, when you look at what we see from some of these prime brokers, there is a sense of FOMO. You are seeing investors not wanting to be left behind, because it's kind of hard to argue when you go to clients, well, we're at all-time highs. Why are we only up a few percentage points? Why are you not up and outperforming even more? But we will, one thing I will call out, when you look at the U.S. market in particular, we have seen a sharp rally in financials. So you are seeing a bit of a broadening away from just the Mag 7. So certainly from a fundamental perspective, it does seem like there are some tailwinds there.
Our equities reporter Bailey Lipschutz there in Tokyo. Take a look at oil markets at the moment, because there's a couple of different things going on, from sort of Middle East tensions to, of course, that bigger than expected addition to the market from OPEC Plus, which was really shaking up those sort of fundamental supply and demand issues there. Oil just dropping there, that larger than expected supply increase, raising now concerns about a potential glut. You're seeing downside of about 0.25% when it comes to trading in some of those crude futures, or more, I should say. Brent actually took a slide of over 1.5% towards that $67 a barrel level after falling again on Friday. We saw WTI also sitting close to around that $66 a barrel pricing as well. Saudi Arabia leading that group, of course, deciding over the weekend that that increase in supply will be 548,000 barrels a day, back on track really for OPEC Plus to unwind the most recent output cuts a year earlier than planned. So obviously that sort of citation of summer demand is one of the reasons for optimism. But of course, all of this sort of shaking up even further volatility, given that we have just come out of that conflict between Israel and Iran, the fragile truce, and now that focus shifting right back to OPEC Plus supply as well as US trade policy as well. Let's bring Stephen Sepchinsky, who leads our Asia energy coverage. And, we know the sort of market share strategy for Saudi Arabia, but were the volumes that were announced surprising?
I think it did surprise the market to a degree, right? You said they're going to increase to by 548,000 barrels a day. The market was expecting to be a similar increase to the last 3 months, which would have been 411,000 barrels a day. This is larger. Yes, it's an increase, but it's not, something that's going to super surprised a lot of the traders. They were expecting this kind of ramp up to a degree. Again, larger than expected, but they were still expecting OPEC to try to add more to the market. I think what's interesting, though, in all of this is you also had on Sunday, Saudi Arabia released higher premiums for the month for crude that they're offering for on sale, which indicates that while they're adding supply into the market, they do truly believe that it is tighter and that they will find customers in Asia for their oil, or else they would have cut prices, right? So it does indicate that OPEC Plus thinks that we are in a situation where the market is a bit tighter. It does require more oil to be pumped into the market, and that's why you're seeing that reaction.
Doesn't fuel demand, though, also peak actually in the Northern Hemisphere very soon, though?
Yeah, that's a really good point as well, right? So oil demand is the highest during the summer. This is the driving season. This is when people get out, use gasoline. Companies are using diesel. And that is one of the situations. Now, we are in a tighter, you look at the inventories in the U.S., you look at the demand in the U.S., it's still quite strong. When you look at the second half of the year, yeah, that's when the market starts to get a little bit frothy. The IEA, an authority on the topic, thinks that oil will flip into a oversupply later in the fourth quarter. That would represent about a 1.5% of the total market would be an oversupply, a sort of glut sort of situation. You also have banks coming out and saying, hey, we're at $67 right now, but because we are going to be flipping into that glut, we could get into a lower $60 range, maybe even $50 for Brent. I think one thing to also remember is there are a lot of unknowns that the market is facing. The trade war situation, how that affects oil demand will be closely monitored. So if there is an impact on consumption from tariffs that are going to be rolled out over the next few weeks, that will add more weakness to the oil market, and OPEC Plus is kind of feeding into it. I think one thing to also take away just as a step back is lower oil prices is precisely what President Trump wants. And if Saudi Arabia is trying to appeal to Trump, or if OPEC Plus, while they do want to capture market share, they're kind of hitting two birds with one stone. Capture market share away from shale drillers in the U.S., but also appease Trump. So that's a strategy that could also be sort of the way that you characterize everything that's happening at the moment.
I was going to ask about the state of play when it comes to U.S. shale, given this drive to, drill, baby, drill, right, by President Trump.
Yeah, I mean, listen, I think there are two things that Trump cares about. Clearly, he does care about the drill, baby, drill, but he also cares about inflation and the price of gasoline at the pump. And if you talk to analysts, if you look at people who monitor Trump, or if you just see how he talks often, I think he cares more about the pump than he cares so much about U.S. oil production. Because when you actually look at the prices, when we're in this price range, shale drillers might actually remove rigs, which means that they would reduce production in the United States. Yes, the sentiment of Trump is drill, baby, drill, bring the prices down, but maybe it's at any means, and he doesn't really care whether or not the shale industry benefits or doesn't benefit from what's happening at the moment. A survey done by Bloomberg does expect drill rigs to fall this year compared to earlier estimates in 2025 before all of this, the tariffs and the different OPEC Plus policies came out.
Bloomberg's Steven Stupczynski there with the latest on oil and OPEC Plus decision to increase supply. We have more ahead. This is Bloomberg. We have an alert on the Bloomberg. LG Energy's second quarter operating profit coming in at 492.2 billion won. That is above estimates that had put it at 315 billion. LG Energy, of course, is a big energy storage system business in South Korea, and we have seen increasing momentum in that sector given the steady shipments of EV batteries, and we're now seeing LG Energy's profit coming in above economists' expectations or analyst expectations. Sales also slightly below forecast, but sort of in line at around 5.5 trillion won. Haidi.
And Shery, we're watching shares of Hon Hai when markets open in Taipei after it reported almost 16% growth in quarterly sales. Let's bring our Asia Tech correspondent Admiral Julius in Hong Kong. So this result was pretty much in line with estimates. What stood out?
Yeah, that's right. I mean, I think probably what stood out was more on the outlook. But as you said, just the results for the second quarter. So we had that near 16% jump in quarterly sales, revenue at $62 billion. That's US dollars for the 3 months ending June. And the company as well, as you said, that outlook looking to expand not just sequentially, but year on year in the third quarter as well. And so that kind of does stand out because a lot of different companies, tech companies, are navigating these geopolitical tensions between the US and Beijing. But then also, of course, Hon Hai being a major manufacturer for Apple is also very sensitive to any sort of consumer weakness if that starts to show up. But it does seem like the outlook for the iPhone assembly business, also the AI server business, are looking reasonably strong. One business line, though, and I think this is interesting to point out, one business line that hasn't really seen finding its legs just yet is the contract car manufacturing business that sits under Jun Seki. He was previously with Nissan for many decades. But essentially there was some local media reporting over the weekend that Hon Hai and Nissan may look to work together out of Nissan's Oppama plant. That's a plant that's otherwise at risk of closing. But Hon Hai said it could be looking to produce, or Hon Hai rather, this was the reporting from local media, from the Nikkei, saying that it could produce EVs out of there. Again, that's not confirmed just yet. Nissan actually has said that they have responded to these results, but just saying that, again, it is that local media reporting so far.
And our drillers there. Well, the market opens in Sydney, Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens with a little bit of caution, Heidi, of course, as investors are watching that tariff deadline. Will that be extended? Right now, the understanding is that it could potentially until August. But of course, we have a lot of other things to contend with, including central bank decisions in Australia and New Zealand.
That's right, having to make those decisions within the context of volatility, uncertainty when it comes to trade. We are expecting that back-to-back cut from the RBA, but perhaps a little bit more caution with holds expected from New Zealand and Korea. Shery.
And of course, a lot of implications for the Bank of Japan as well, given that we got labor cash earnings surprising to the downside. We're talking about real cash earnings falling by the most since 2023. Really, those inflation pictures already starting to hurt consumers across Japan. We'll be watching the JGB space for that reaction, not to mention, of course, that we do have a 5-year auction as well. Take a look at the Japanese yen holding at that 144 level after leading gains in the G10 peers in the overnight session. We're seeing the Nikkei falling 0.2% after really muted gains in the past two sessions or so. Investors just on the sidelines as we continue to watch those trade negotiations between Tokyo and Washington as well. Take a look at how the Kospi is coming online. We had significant pressure in the previous session. We were watching the Korean won as well, which is at that 1362 level, not doing much. But of course, we do have the Bank of Korea's rate decision this week as well, a hold expected from that central bank, Haidi.
What's going on, Shery? And take a look at what we're watching here in Australia, particularly when it comes to the FX front. It's quite interesting. If you take a look at some of the moves that we've seen in the dollar over the past couple of weeks, almost all of that has now faded, right? Some of that trade uncertainty is continuing to play out. The dollar has been mixed, so we continue to see pretty much resilience when it comes to the Aussie dollar. 65.46 is where we're trading at the moment, ahead of that RBA decision, where they are widely expected to come through with that back-to-back rate to cut there. And we are seeing a very tepid start to trading when it comes to equities. This is a market, though, when it comes to Aussie stocks, at a new record high. We've seen healthcare shares in particularly trending higher. Watching some of the oil names, given that bigger than expected return to production and supply from OPEC Plus, led by Saudi Arabia, that we saw over the weekend. Let's bring in now Mark Matthews, as the head of Asia Research at Julius Baer. Mark, always great to have you with us. And so there is sort of a level of expectation, it seems, baked into at least equity investors that whatever comes of this trade deadline, if there's extensions for some countries, if there's sort of broader frameworks without much details for other trading partners, that it may not be as bad as the initial assumption. Do you sort of follow that camp of thinking?
I do. I think the market could get a little rocked as we approach these deadlines, which, by the way, seem to change every week. So you're right that seems like the latest deadline is now in August. But whatever the case, I think we've learned by now Trump's negotiation style is to do a massive artillery barrage before he eventually does a deal. And I don't know if it's really necessary to do that, but that's his style. So we're seeing that again with all these letters that he says he's going to fire off this week. But Walmart's share price would not be where it is if we were really going to see huge tariffs on imported goods. Walmart is close to an all-time high. And container throughput from Chinese ports to American ports would not be where it is either. It's essentially the same number as it was in the first half of last year. If you look at the surveys from various Federal Reserve banks and think tanks asking retailers what % of tariffs they pass through to their customers, it's around 55%. So the consumer is not being as hurt as the actual numbers would lead you to believe. And then the last thing I'll just say is, I know it sounds incredible, but imported goods are only about 10% of the consumer basket. The consumer spends a lot more on housing, transportation, healthcare, insurance, education than all that stuff you see in Walmart. There's a lot of stuff in Walmart, but people really only need to buy a new television maybe once every 3 to 5 years. So it gets a lot of noise, but I don't think the market is going to go down nearly as much in April as if we do start to get a little rocky this time.
So you sound quite sanguine when it comes to inflation. What about growth prospects then? Do you think then the expectations of 2, potentially 3 cuts from the Fed this year might be a bit overcooked at this point?
I think that 2 is realistic. That's what we're looking for. And I would just say the payrolls were surprising, as you know, for June, 147,000, despite the fact that I don't know how many people have been expelled from the country. It's a very large number. So the fact that you can still have such a vibrant labor market at the same time as your labor force is going down, I think reflects a pretty strong economy.
And of course, what the Fed does has huge implications for central banks across Asia and how much leeway they get in actually carrying out monetary policy, right? We do have central bank decisions from the likes of South Korea, Australia, New Zealand, Malaysia, as well, all expected by consensus to keep rates on hold. Are there any economies that you're watching for potential implications if we do continue to see the Fed delaying its cuts?
None specifically, but I think the overall trend is still for loosening monetary policy globally, and the Fed is behind the others for the first time in many years. But we do expect a first cut in October, and then following that, I think in December and January and March. So we are looking for 4 over the next 12 months to a terminal rate of 3.5%, and that's obviously a positive backdrop for equity markets.
When it comes to the trade negotiations that we started talking about earlier, we are expecting something out of Thailand as well. It seems that they're trying to open up access to their farm and industrial goods coming from the U.S. as well. We've seen a lot of concessions also coming from the likes of Vietnam. When it comes to being an investor into these markets, will they have significant implications on where you put your money?
No, I don't think so. I mean, realistically, what can the Vietnamese or the Thais buy from the Americans? Maybe some agricultural products, to your point, or inputs to agriculture, like, I don't know, nutrients or that kind of thing, but they don't have the purchasing power to be buying very expensive items. And I find actually the Thai market quite interesting at this juncture. It is the worst performing emerging market in the world. They've just moved on to their 17th prime minister in 20 years. It's not a good situation. It probably will be pretty rocky politically this summer, but in times like this, the baby gets thrown out with the bathwater, and there's some really good companies in Thailand that I don't think should be trading where they are. They're quasi-monopolies or other companies that now have dividend yields of 8 or 9%. I find them actually quite attractive.
Are you selectively opportunistic when it comes to Greater China as well, whether it be onshore or offshore?
I'm particularly interested in the Hong Kong property stocks, and the reason is I think Hong Kong property prices are putting in a bottom in the physical market. They're down about 30%. They could go down easily another 5 to 10, but the property stocks are trading at discounts to their net asset value between 60 to 70%, which they never have. You can look back at all sorts of other calamitous times from the, I don't know, Tiananmen Square, 1989, the Asian crisis, 1998, the global financial crisis, never saw these kind of discounts. I can't really believe it. It's the most mispriced asset, in my opinion, in the world. And we're starting to see signs, anecdotally, that prices are putting in a bottom. A friend of mine, and this is a real anecdote for you, but a friend of mine's moving there, so he wants to rent in a place, and the agents are telling him the rentals are already 10% off their floor. Some of these famous Canto pop stars like Gloria Tang and Karen Mock, they've been buying properties for themselves. And the sister of the former Chief Executive Tung Chee-hwa and one of the vice presidents at Ant Financial. So those are just little anecdotes, but that's what I like in China the most is Hong Kong property stocks.
Mark, we always enjoy your sort of quirky anecdotes to support those views, but I wanted to get a quick view on the sort of consternation that we continue to see in bond markets, particularly on the longer end. How closely are you watching that still for more volatility?
Yes, I'm watching it with some consternation. There is a buyer's strike on 30-year treasuries. Now, they're not coming back to test 5% just now, but the CDS spread of treasuries is now the same level as it is for Italy and Greece. We've never seen that before. And the largest buyer of treasuries in the world is no longer central banks, by the way. It's private investors. Central banks stopped being the largest investors in treasuries about 10 years ago. And the private investors, when I read articles on Bloomberg, don't seem to be interested. I just read an article recently that Bloomberg wrote citing PIMCO, which has been investing in treasuries since, I think, the 1970s, and Double Line, which, of course, founded by the bond king, Jeffrey Gundlach, basically saying they don't want to own 10-year treasuries, 30-year treasuries. So it is It is an issue, absolutely. Now, the U.S. government is thinking of ways to get new buyers. For example, the development of the stablecoin market through the Genius Act could see more buyers of treasuries, and the loosening of capital reserve requirements for global systemically important banks could loosen up quite a lot of money that could be invested in treasuries. Nevertheless, I think it's a signal that a country should not run a deficit to GDP of 7% in normal times. We are in normal times. You can do that in a war or a pandemic, but not in normal times. So the market is definitely telling the U.S. government it doesn't like the way that it's running its own balance sheet.
Yeah, we'll be watching JGBs here in Japan as well, because we do have that 5-year auction. And of course, we have seen those fiscal concerns roll markets here in Japan as well. Mark Matthews, good to have you back, head of Asia research at Julius Baer. And when it comes to the stock markets, this is one company that we're watching in South Korea. LG Energy's second quarter operating profit beat estimates. We actually saw a jump of more than 6% at the open. Paring back some of those gains, the energy storage system business really building momentum for this company. They're seeing a steady shipment of EV batteries out of South Korea. So you can see the positive numbers out of their second quarter operating profit. This is Bloomberg.
Out on Monday having to do with the trade deals. Could be 12, maybe 15, Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
President Trump on the latest tariff negotiations as nations are now scrambling to secure a trade agreement with Washington or lobby for extra time ahead of Wednesday's deadline for those tariffs to come back up. We're talking about the blanket tariffs on several nations. Our chief North Asia correspondent, Steve Van Engel, now joining us for more on this. So, Steve, will we see those blanket tariffs resume on Wednesday or not?
Well, that's been the signaling, obviously, from the White House and from Donald Trump for a long time, that on July 9th, it's just Thursday Asia time in the morning, that those reciprocal tariffs that we had on April 2nd would go back to their full-throated versions by this Wednesday. But again, those letters that Donald Trump was just talking about, between 12 to 15 letters, and also Scott Bessent saying that they're in negotiation really with about 18 of the top trading partners with the United States that have not already come up with deals. We're likely to see some reprieve, at least by 3 weeks, if they are engaged in a serious dialogue with the United States. So we could see that deadline of this Wednesday sort of pushed out softly to about August 1st. So you could say that those letters might have a little sprig of an olive leaf sprinkled into the envelope. But again, it's something that has riled trading partners and also adversaries. The BRICS nations gathering are talking about putting together a communique condemning the unilateral approach to trade negotiations by the Trump administration. That's not really a surprise. But again, we'll just have to see over these next 3 days as negotiators led by Scott Bessent and also Howard Lutnick, the Commerce Secretary, and also the Treasury Secretary, respectively, work through the weekend to further these potential deals. So these next 72 hours or so will be very interesting to see what deals are announced or what deals will be potentially delayed by another 3 weeks. That's what Scott Bessent alluded to, that we could see 3-week reprieves for a number of different trading partners. So right now,
could that happen?
Everything is up in the air until that deadline.
Yeah, including some of these talks in Asia, right? Could we see extensions? What's the state of play in this part of the world?
Yeah, I think everything is in play in this part of the world because the Asian economies, by and large, got the bulk of those higher tariffs. Cambodia, 49%. We had Thailand, 36%. Malaysia, a number of them had very high tariffs, and including key trading partners like South Korea, 25%, Japan, 24%, India, 26%. So we're seeing, let me just run through a number of those right now because the U.S. administration has been talking to Japan, South Korea, the EU as well, India and Vietnam. South Korea and Japan, they're quite concerned, no doubt, about the auto tariffs. India is as well. We had Indian officials late last week alluding that they might stand firm on some of these and have reciprocal measures of their own because of the automobile tariffs and the automobile parts. And again, the sectoral tariffs on steel and aluminum are, sticking points for the countries like South Korea, Japan, and India. We see the Japanese Prime Minister late last week, Ishiba, saying Japan is prepared for all possible tariff scenarios. They're ready to stand firm and defend its interests. Akazawa is the Japanese trade negotiator. He has had several rounds of phone calls, 2 actually, Friday and Saturday. 45 minutes on Friday, an hour on Saturday with Howard Lutnick, the U.S. Commerce Secretary. So they are trying to avert, of course, the worst-case scenario on Wednesday. Then we have, let's run through some of these Southeast Asian nations quickly. Cambodia, the government on Friday there saying it had agreed to a framework agreement with the United States and some sort of announcement is imminent. Again, Cambodia has that 49%. They sell a lot of textiles and footwear to the United States. Indonesia signals confidence it's close to signing a quote-unquote bold agreement with the United States spanning critical minerals, energy, defense cooperation, and market access. And then Thailand, despite its obvious prime minister turmoil right now in Bangkok, it's making a last-ditch effort to avoid those 36% tariffs with offers of greater market access for U.S. Farm and industrial goods and more purchases of U.S. energies and possibly also Boeing jets. So there's lots to cover, a lot of time still left to be had before Wednesday's deadline imposed, obviously, by the White House.
Chief North Asia correspondent Stephen Engle there. Take a look at how European futures are opening at the moment. This is a picture across this Monday morning. And of course, we continue to see some of those trade tensions play out between China and the EU as well, with some of these concerns over medical products and the sort of tit for tat that's hanging on there. This is a picture as we see a little bit of upside when it comes to German DAX futures, up by about 0.2% there. And we are seeing European stocks coming off that weekly drop with the focus now firmly on trade deals with the US. The euro seeing a little bit of upside as the dollar continues to give back gains. More ahead here on the Asia Trade. This is Bloomberg.
Take a look at how oil is trading at the moment. We're seeing 2 sessions of losses for WTI. OPEC Plus announcing a surprise increase in production, expected to lead to a surplus later this year and put pressure on prices. You can see WTI now falling towards that $65 a barrel level. Of course, we continue to see concerns about demand, especially given the ongoing trade negotiations. So this was a surprising decision by OPEC to increase production, and also coming at a time when fuel demand could be peaking in the Northern Hemisphere summer. Lower prices could definitely be a win for President Trump, though. Of course, he's been calling for lower fuel costs. But it could, on the other hand, cause pain for U.S. oil producers. For more, let's bring in oil reporter Nicholas. Nicholas, so what's the logic behind OPEC Plus really hiking supply by larger than the expected amount by markets at a time when, as I mentioned, demand concerns are still out there?
Well, that's a really good question. I think it's important to flag that, firstly, this is a big surprise, right? So last week, traders were still expecting another 411,000 barrels a day supply hike for this week. OPEC surprised everybody by putting out 548,000 barrels. And that's actually an indicator of their confidence that demand is going to hold up, at least in the short term, right? So we're going into summer right now, and summer is the season when people are using gasoline, when companies are using diesel to a large larger extent, and so that's why OPEC is confident that summer demand is going to keep prices up and it's going to keep consumption going. It's also worth flagging that inventories right now are really tight. If you look at US diesel inventories, those are really, really low. Another thing to flag is that crude inventories globally are tighter than we'd expected. So even though, as you rightly pointed out, if we look in the medium to long term, like as we head into, well, closer to the end of 2025, supply is going to look more flabby. Right now, that doesn't seem the case.
I guess the question is, how long is that tightness likely to hold?
No, yeah, I would say right now, like what factors we should be paying attention to is how long the summer demand is going to hold up. So as I pointed out, diesel and gasoline are relatively important at this time of the year. So I think that's where we're going to see supply tightness. And yeah, I think that's the big factor that we're paying attention to. If the supply relative tightness continues for at least a month or two more, then we're likely to see markets continuing to be propped up and OPEC's gamble paying off.
And Saudi Arabia already hiking premiums for Asian customers.
That's another good point. So the Saudi, the leader of OPEC, right after the decision to increase supply, also raised the price of its flagship barrel Arab Light to Asia by $1. And that's not the move that somebody who's expecting weak demand would make, right? In such a case, you'd be convinced you should be lowering prices. So I think that Saudi collectively, both in its move in OPEC as well as its move on its own oil price up, is confident of demand holding and is confident that the prices would still be taken given the tightness in the relative short term.
Bloomberg's Nicholas Weil there with a look at all of the dynamics when it comes to oil prices at the moment. We're also watching gold prices because there is sort of a little bit more attention when it comes to what's going on in the Middle East, and we're seeing that sort of play out a bit. But at the moment, it really is firmly focused on the sort of pullback of trade tensions. Gold at the moment is easing a little bit lower over the past couple of days. Traders looking at some more clarity when it comes to trade deals as we get into that July 9th tariff deadline set by President Trump, whether there might be a few more sort of hopes of concessions for some of these trading partners. But remember, we're coming off a week last week where we had an almost 2% rally in gold. So we are perhaps seeing a little bit of profit taking, particularly given some of the to and fro that we see when it comes to the dollar index as well. Bullion overall up by more than a quarter this year, about $170 shy of a record that we saw back in April. Shery.
And of course, gold will also be impacted by the changes in monetary policy that we're seeing around the world. When it comes to the FOMC minutes, we're expecting them this week. That will have implications for the bond space as well. We're getting central bank decisions in South Korea, Australia, New Zealand, and Malaysia. So we're watching really the sovereign debt space. We do have treasury sales that include 10 and 30-year maturities. Here in Japan, we have a 5-year sale. We already saw the labor cash earnings coming in below market expectations, especially when it comes to real wages falling by the most since September 2023. So given, of course, the volatility that we've seen on the sovereign debt space, especially with UK gilts also continuing to be under pressure after that sell-off last week on fiscal concerns, sovereign debt moves will be key this week. We have more ahead. This is Bloomberg. Trade tensions between the EU and China are also growing. French Finance Minister Eric Lombard is calling for stronger tariff barriers as Beijing announces reciprocal curbs on EU medical devices. China is also imposing anti-dumping duties on European brandy for 5 years, while exempting major producers that commit to keeping their prices above minimum levels. But the French industry minister told us exclusively that this should not be seen as a victory.
It is too early to talk about the impact because we need to assess the overall impact for the cognac industry. Trade wars only make losers. So we shouldn't be happy with what was announced today by China, even if some agreements can be found. But I think that there are a lot of jobs, thousands of jobs that are at stake with the cognac industry. Many parliamentarians, many MPs talk to me about what happens in their constituency with cognac. And I think that we all must find a way to de-escalate this trade war with regards to cognac, but also with regards to all the tariff issues.
Another, obviously, big deadline is July 9 for the US tariffs. We may have some letters from President Donald Trump today sent about these US tariffs. Do you think that if the EU settles with 10%, is that a good deal for Europe? Should we just settle at 10% and be done with it?
No, I don't think that's a good deal. I don't think that's a good deal because previously we were at 2, 3, 4% of tariffs in many industries, and all the value chains were organized by taking into account this level of tariffs. So I think that 10% is not a good deal, and I think that we all should find a way to get back to the former situation.
French Industry Minister Marc Faraci there speaking exclusively with Bloomberg's Caroline Conan. Well, leaders of the BRICS nations have begun their summit in Brazil by condemning US and Israeli attacks on Iran and calling on Israel to withdraw troops from the Gaza Strip. Our executive editor for economics and government in EMEA and LATAM, Flavia Kraus-Jackson, joins us now from Rio de Janeiro. So, Flavia, tell us about sort of the headline discussions that are taking place amidst what is, of course, an interesting backdrop in terms of some of these key players from Iran, from Russia, from China actually not being there at this gathering.
Yeah, it's quite an unusual BRICS in many ways, right? Because two of the big acronyms in that grouping are not here. President Xi's not here, and of course Putin isn't here either. So that makes it in a way quite an unusual, understated affair. And then of course you have in the form of Lula a very punchy host. He's obviously here, very warm, being with Modi, who's the star of the show really, and he's going to be treated to a state visit later. But Lula really marches to the beat of his own drum. He's not afraid to say controversial things, and of course in the backdrop you have the tariffs that are about to come down, and certainly tomorrow we'll see some of these deals, if they come into shape, especially the one with India. We'll be able to get some real-life reactions here in Rio. And, of course, on the geopolitics, the BRICS have really stood apart as presenting themselves as a sort of alternative to the U.S. order, and ironically, as defenders of multilateral institutions. So it's quite interesting, really, to sort of see in the family picture Russia and Iran sort of relegated to the margins, and also the kind of language that they're using to condemn some of the actions in the Middle East.
Yeah, it will really not play well for President Trump, that, of course, is meeting with Prime Minister Benjamin Netanyahu on Monday at the White House.
No, of course not. And I mean, I think what's been very interesting to see is that Lula and Trump could not be further apart. But somewhat unusually, Trump has not picked a fight with Lula and vice versa. Certainly, Brazil hasn't been caught in the crosshairs of the trade war. And Lula himself has said some pretty contrarian things about Israel that in the past, certainly when he said it in the G20 context, drew a lot of condemnation. But here, he's very much more with like-minded individuals. It's obviously the G20. The BRICS aspires to be very much like the G20, but hasn't quite lived up to the promise, even though it represents 49% of the population and has certainly doubled in size. But one thing, for example, that we noticed is that for 2 years ago, when Saudi Arabia and several other countries were invited, essentially doubling the size of the BRICS to 11, countries like Saudi Arabia specifically are still equivocating and not entirely sure that this is a club that they want to be a member of.
Chinese Premier Li Qiang saying that BRICS countries should champion the peaceful resolution of international disputes. How well has Beijing really driven the BRICS nations in order to gain more global clout, not to mention expand the grouping as well?
Well, I mean, obviously those are interesting words, but the fact that they're not spoken by Xi in this setting, in a way, kind of doesn't pack as much of a punch. And I think suddenly there's a sort of perception that China really maintains always the same position. It doesn't really want to tip the balance in any specific way. When it's come to the conflict in Ukraine, it's very much given backing to Russia. When it comes to Iran, another ally in the Middle East, it hasn't actually done very much to help that ally. So those positions are very much consistent with how China has sort of essentially positioned itself geopolitically. It uses words, but it doesn't really follow through with actions.
The other stories that we're following this hour, and Israel is sending mediators to restart talks with Hamas in Qatar after the militant group said it was ready to negotiate on President Trump's proposed 60-day ceasefire in Gaza. The proposal includes a return of 10 living and 18 deceased hostages. It has been accepted by Israeli Prime Minister Benjamin Netanyahu, who's set to meet with the US President in Washington today. Trump says he's optimistic the sides are close to an agreement.
I think we're close to a deal on Gaza. We could have it this week.
Iran's Supreme Leader Ayatollah Ali Khamenei has appeared publicly for the first time since the 12-day war with Israel began last month, according to Iran's state media and his official website. After weeks of sheltering in a bunker, Khamenei attended an annual Shia religious ceremony held at his compound, the New York Times reported. Khamenei didn't address the crowd, which appeared surprised by his appearance. More ahead on the Asia trade, this is Bloomberg. And we'll be watching shares of Hon Hai when markets open in Taipei today after it reported almost 16% growth in quarterly sales. Our Asia Tech correspondent Julius has more from Hong Kong. So the result was pretty much in line with estimates. What jumped out?
Yeah, I think what really stood out was more on what the company signaled as to where we go in the third quarter, because of course it's a very difficult moment for many companies, especially those in Taiwan that are really trying to navigate those tensions between the US and China, and also of course any concerns around broader weakness in terms of AI demand and consumer demand, as Hon Hai is the major assembler of Apple iPhones. But essentially both of those seem to be holding up because the company signaled that it could see sequential and also year-on-year improvement in the numbers going into the next quarter. But as you said, recapping for the figures for the 3 months just ended June, that we did have a near 16% jump in quarterly sales and revenue at $62 billion as well. What's also interesting to notice some local media reporting we had over the weekend. So as we know, Hon Hai's focus, or one of its primary focuses, is on building out its contract car manufacturing business. So far, we're really yet to see that find any legs, but we did see the Nikkei, this is local media in Japan, reporting that Hon Hai and Nissan may look to work together out of one of Nissan's plants in Japan. That plant is otherwise at risk of closing, but Hon Hai could look to produce EVs out of there. Nissan, for its part, has already responded, saying that nothing's confirmed as yet, but just an interesting development on that business line.
What are we expecting from Samsung as well, that's reporting earnings this week?
Yeah, Samsung is going to be one to watch because, of course, again, another business that's very sensitive to any sort of geopolitical headwinds and also seasonality, given its DRAM and NAND business lines are very, very much sensitive to that. But we could see some improvement. In fact, our Bloomberg economics team or intelligence team is saying that there could be a recovery in DRAM prices rather in particular. They could have improved perhaps on the year. Operating profit, though, still going to be a very big focus, given there has been some weakness, particularly, again, more in some of the memory chips, display as well. That's more down to seasonality. But we're watching as well how their devices perform, given you still have those sales of the Galaxy S25 in focus.
We may also see reaction to the reporting on possible chip curbs in Malaysia and Thailand.
Yeah, this is a really great scoop that we had out on Friday from our team here. And what we understand is that the Trump administration could be looking at restricting shipments of AI chips from companies like NVIDIA, but to places Thailand and Malaysia are very much in focus. And the big concern here, of course, has been around possible chip smuggling into China, and these have been possibly some of the key destinations for that. So there could be further restrictions on both of these countries and their access. Analysts have been talking about this. It could end up having some quite big bearing on some of the companies operating in the data center sector in particular. And so we're watching those names closely at the Open in Thailand and also in Malaysia.
Annabelle Driller is there. Staying on earnings in Japan's consumer sector will be in focus. Fast Retailing, 7&I Holdings reporting their results on Thursday. Estimates suggest that the Uniqlo and 7-Eleven owners could post higher profits from strong domestic and overseas sales. Investors will also be watching earnings from Tata Consultancy Services for factors including the impact of US tariffs and cost-cutting measures. Shery.
And we're also following China's Xiaomi, Haidi. It's become the only tech company to successfully diversify into car making, an achievement that even Apple couldn't manage despite spending a decade and $10 billion on its failed attempt. For more, let's bring in Bloomberg Asia transport reporter Linda Liu. Linda, so why has Xiaomi's been successful with its EVs while Apple failed to make a car for, a decade?
I think the biggest factor probably comes down to urgency, because we saw Xiaomi's founder Lei Jun really stake his personal reputation on this car-making endeavor. He said that it's going to be his last entrepreneurial project. So Xiaomi really just didn't have time and resources to waste, as we saw in the case of Apple. Xiaomi is also, as a maker of consumer goods already, they have sufficient supply chain know-how that it drew to help to make its cars. And lastly, I think Xiaomi just has a really strong fan base in China and also around the world, where, they could really lean on that brand recognition to promote their cars to Chinese consumers.
What are the risks then as they continue to expand the EV side of the business?
There are definitely risks and challenges facing Xiaomi as they continue to grow. For the China market, it is very competitive. Despite Xiaomi's these early wins, we see their orders are just blockbuster numbers posted within hours of these vehicles being announced during their launches. But obviously, Xiaomi is still manufacturing at a small scale compared to industry leaders like BYD. So as it continues to grow and expand its product lineup, it's going to inevitably come up against these industry rivals. And they've also said they want to expand into the international markets. So that means they also need to navigate the geopolitics, such as the tariffs on Chinese EVs in markets like the EU, Turkey, and the US. So if Xiaomi manages to navigate this successfully, then maybe, Xiaomi fans globally may be able to order Xiaomi cars one day.
So when you look at the development of Xiaomi's car business, is this something that other tech giants can replicate, that sort of success?
It's really interesting now because I think for technology companies, there's actually a lot of opportunities and synergies now in the EV industry. As people have said, EVs are kind of essentially iPads on wheels because of how much technology now that goes into the EVs, such as intelligent cockpits as well as smart driving technologies. So we saw earlier in the program, Hon Hai, the iPhone maker, is trying to explore contract manufacturing routes with Nissan. We've also seen Chinese telecommunications giant Huawei taking a different approach, which is to become a technology supplier to Chinese manufacturing partners. So their Ito brand that's made in conjunction with a partner called Shery is selling really well. It's a luxury brand that offers the top-of-the-line Huawei technology technology. So it's really interesting to see these companies taking different routes. And I guess time will tell which of them will become successful over the long time.
Bloomberg's Linda Liu there, and subscribers can get more on this in a live Q&A a little bit later, discussing how Xiaomi succeeded in EVs where Apple failed. That's coming out at 11 a.m. Hong Kong time. You can join the conversation on the terminal or through the web link that you see on your screen. More ahead on the Asia trade. This is Bloomberg. Luxury spending in Singapore is defying a global slump, even as high-end retailers grapple with sluggish demand in major markets, including China and the US. Consumer reporter Shery joins us now for more. And it's interesting because so much of the previous demand when it comes to a hub like Singapore has come from overseas visitors, say from mainland China, right? Are we seeing more of a strong local base of buyers now?
Yes, so Singapore has long been one of the top places in Asia for rich people to park their wealth because of its low tax and very pro-wealth policies and a very stable political environment. And that's happening especially so during the 3 years of COVID, when China and Hong Kong saw very tough travel restrictions. And that caused a lot of capital and talent to flow to Singapore. So Singapore really benefited from this regional flow of wealth, and that really solidified Singapore's status as a regional financial hub. And the current luxury boom, I think, was could be partly attributed to that trend.
So how are brands making use of this when it comes to their product strategy for the city?
So brands are right now seeing Singapore as more of like a testing ground for their cutting-edge shop designs. For example, some brands are offering bars and some brands are offering cafes, and luxury shopping malls in Singapore are also offering more VIP-oriented services. For example, Marina Bay Sands is offering buggy services for VIP customers to go to their personalized styling sessions, and the mall is also planning to have more VIP-oriented salon sessions and other kind of services.
Bloomberg Shirley Zhao there with the latest on the luxury market in Singapore. Now in Hong Kong, shares in Richard Lee's FWD Group begin trading this morning after a $445 million IPO. The insurer is seizing on the hot market to finally secure a listing initially planned 4 years ago. Let's cross over to the Hong Kong Stock Exchange with our correspondent for China, Min Lo. Min, so how was the demand for this IPO?
Yeah, we are just about 40 minutes away from the opening of market. So here at the Hong Kong Exchange, it's still quite quiet, but there are some staff here getting ready for the proceedings. But we did see at the grey market, this was 37 times oversubscribed by retail investors. It's not considered very overwhelming considering IPOs here in Hong Kong. You look at CATL, it was 150 times oversubscribed. At the grey market, it was trading as down as much as 6.6% at one point. But our Bloomberg intelligence teams believe that there is still room for the valuation outlook to get after the listing, given that the price-to-book value ratio is just 0.9 times. So the pricing is not very aggressive, especially when you compare it to other insurance giants like Prudential or AIA. But of course, the attention is not just on the retail investors' interest, but also the institutional investors as well, because FWD has managed to secure key cornerstone investors, including a life insurer from Japan, as well as a unit of the Abu Dhabi Sovereign Wealth Fund, which is interesting because this is a pan-Asian insurer, but it's getting the attention from Middle East as well, thanks to the Hong Kong government's efforts to attract capital from the Middle East, making Hong Kong one of the very popular markets for IPO listings this year.
As Jerry mentioned, it's been a 4-year-long journey to get to this stage. So why the timing to list now?
Yeah, it's been a long anticipated IPO because the FWD initially planned or had applied for a listing in the U.S. in the private market back in 2021. It cited the size and the liquidity of the U.S. market at the time. It was a $3 billion listing, but it got stalled when U.S. regulators were concerned about the risks of Beijing's overreach over Hong Kong companies. So then half a year later in 2022, FWD then applied for a listing in Hong Kong instead. But you remember in 2022, it was a post-pandemic era. The economy here was hit. The capital markets were down. It drove valuation down. So then the plan was delayed again until earlier this year when finally we got a re-rating of markets here in Hong Kong. You can see on that chart there, we're starting to see a rebound in Hong Kong IPOs and deals, $15 billion worth of share sales so far this year. That drove valuation up, and that's why perhaps the company is taking advantage of the favorable market conditions now to finally list its IPO again.
Bloomberg's China correspondent Min Min Lo there. Let's take a look at how futures are shaping up as we do see a little bit of risk creeping into the session. Of course, is it a big week when it comes to potential trade developments as well as these expectations from central banks as well. The RBA is on tap to come through with a second back-to-back rate cut, but we're expecting holds from the likes of Korea and New Zealand. And of course, at the same time, still a bit of uncertainty as to whether we'll have trade deals or trade deal extensions in terms of those negotiations before that July 9th deadline. We are seeing S&P futures looking a little bit softer, about 0.4%. Taiwan futures are looking a little bit better to the upside and pretty flat when it comes to trading on A50 China futures at the last trade. Shery.
And pretty mixed when it comes to the Asian session this morning. We're talking about the Nikkei falling 0.3%, being led lower by energy, materials, and financial stocks. On the other hand, you have the Kospi gaining 0.2% at this point. Of course, we have seen a little bit of downside in this market as well, given that President Trump's blanket tariffs could resume on Wednesday. We're keeping a close eye on that as we get central bank decisions across Asia. We'll be watching what the Bank of Japan will also do later in the month, given that we saw real wages falling the most since September of 2023. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.